Hello traders, good week, happy Monday, happy March, new week, new month, new energies. How are you today? How was your weekend? How was your Italian elections? Greetings from Austria, thank you very much, Andrei. Greetings back from Canada. We are worldwide here, right? I can see we have a lot of countries today. We have Greece, South Africa, UK, Italy. Italy, hello. What else do we have? Australia, New Zealand. Welcome, guys. We have the US, of course. We have US and we have Canada. We rock. Bulgaria. Marin, you should be celebrating the national days, no? You said it yourself. 3 days ago. Oh, you were. Now it's time. Now it's time to trade. That's right. I agree with you. All right, guys. So once again, welcome on board for a new week. This is the live session. I would like to welcome everyone and wish everyone a wonderful trading week and personal week, of course. I can see some new names with us here today, as we normally see on Mondays. Welcome on board, guys, and I hope you will enjoy. Just quick. This is the Monday session. Monday session is always the longest session, with all its meanings. It means that I'm going to cover everything, so I hope you put your distractions aside. No phones, no tablets, no Facebook, Twitter of Mr. Trump, or the recordings of the UFC event that you missed, or anything like that. I hope to have your focus because we have a lot of things to discuss about today. William, thank you very much. Yeah, much better. My voice is much better than a couple of weeks ago. Thank you for that. And for the new friends here, just quick explanation what's going to around and what is happening. So this is a trading report. This report you receive after every session we have. Which means after every live room. Yeah, I'm working on that, me or Jordan, working on our reports, sending it to you. This report is, in very simple words, a summary of the live trading room. Okay, so here, this is the video right at the beginning, how to use the report. So please go over that, watch it. Everything is explained how to work and use the trading report for your benefit, how to understand it completely. In the comments, you have the most important webinars to go and learn and watch on your free time. No pressure, of course, no rush. On your free time, you just click on that and it directs you to the members area media zone with the video itself. Below that, we have the two sections, basically. The comments, which is the deeper explanation, detailed explanation about what we have, what direction we look to trade, and if we have both directions, then which belong to what time frame, right? So we can be, like, for example, short term long and long term short. Okay, so it's all depends on the cycles we trade, of course. Everything is explained according to the markets, including the cryptocurrencies. That's the updates we have normally, not on Monday, but during the next weeks, the next days of the week. And here, this is the very important table where you can simply click on the chart and it shows you exactly what and why do we choose to trade. So what is the reason? If we have a cycle, if we have the convergence, if we have the whatever it is, right? What we can see, that's basically our expectation for each and every single instrument. That's all. Okay. The cycle it was, what we are looking to do, and what strategy, which normally, of course, all the strategies, it doesn't matter what strategy you trade. What most important is you choose the direction right. Very important, we have the validation and invalidation, and according to that, we manage our positions, short term, long term, etc., etc. So that's the quick explanation about what's going on. I also very much recommend to go over the in the members area itself, the video tour. Video tour just basically explains you how do you use the members area. What do you get there, what do you have inside, and that's all. Now you have the Telegram groups where we continue our chat all the time, so for whatever the question you have, you can find us in the groups of the Telegram. Me, Jordan, Rudy, and other traders, all the other veterans and experienced guys of the club are there. So that's all. Welcome on board once again, and I hope you will enjoy that and work hard for your own successful trading. So as I mentioned before, Monday is the longest session, so please be ready for that and have your focus. So in the Telegram groups, some have the tea ready, some have the popcorn popcorn ready. That's good. That's good. I have myself here some couple of coffee, some cup of coffee and Coca-Cola Zero. I know it's not good, but sometimes it's required. All right, guys. So let's begin. We have the non-farm payroll week, which means this week could be tricky. Non-farm payrolls week tend to be tricky in the terms of technical setups, and there is only one reason for that. In sensitive fundamental weeks like the FOMC event, like GDPs in some times, and mainly in non-farm payrolls, the markets tend to be very non-technical. For one reason, the big money not playing full power inside. Most of the big money during such weeks is sitting on the fence, waiting for the right opportunities. Meaning, if the big money does not design the moves, that it's a great place for algos. It's a great place for intraday short-term money. Sometimes it's a very big money, but basically that's where the noise comes from, and that's where the setups tend to be technical, tricky, and that means risk should be low accordingly, and the patience should be accordingly very high, which means we should be in the situation. If normally it's very important to wait for the good setup, and on such weeks it's even more important. Wait for the right setup and the right timing, and that's what I'm going to explain basically during today and of course the week. Okay, your attention that normally, historically, and statistically, this is something that not many pay attention to, but still it's very important from my side to remind every non-farm payroll week that during this week the yen pairs tend to be bullish. It's not 100%. It's not a strategy to rely on or to deal with blindly. So, it's now bullish, so let's buy. But it's something to remember, because normally it tends to be bullish. What's the main reason for something like that? Again, everything is coming from the simple logic, because the big money is not involved in the market too much, as I explained before. It takes out the focus from carry trading or risk trading, and yen pairs are the most connected pairs to the market environment due to the historical difference between the rates, the cash rates, the carry trading. And this is something that goes with the market basically always. So when the big money is not playing inside, it's a good time for the short money to deal with that. And statistically, yen pair tend to be bullish during this week. That also is said for the indices, at least part of it. Okay, and you will see that actually this Monday started very bullish already. That was pretty serious retrace for many of them. So I'm going to discuss about it. Okay, that's the few things I wanted to mention before we start actually talking about the chart. So that's all. Andre, you are right. Of course, non-farm payrolls, unemployment rate. It comes together normally. So that's why it's so important, right? The jobs market is extremely important for any further future financial or economical decisions from the Federal Reserve side. Okay. All right, let's begin, guys. We are going over the European pairs first of all, then we go to the pound, and we cover all the rest according to the trading report. I'm going over the list, okay, and we will be covering that. It could be very volatile market, I agree, but on the same time, it could be very zigzagging market. It doesn't mean it will not be volatile. Volatility sometimes brings zigzags, right? That's all. So, yeah, the connection fall down here. I'm not sure why, but here we go. We are coming back in a second. Something with the servers of FX Pro. Not sure why. As long as you hear me, we are good. Anyway, back to the euro dollar. We started our bearish view on the previous week. We were on the short term because we didn't have anything clear for the long term. So we started our environment to the bearish side. We enjoyed the two waves down here, right? All the way until we got a second false break in this zone. One false break on the top, second false break on the bottom could turn that situation into what? Who can complete me here? Range. Thank you very much. And in that case, we can see if we have equal distances, and we do, which makes it valid. The distances between these spots and these spots are very good, beautiful. So this turned to be a very possible range, which means if we are at the end of a daily and weekly cycle, we have a double cycle. On the daily we have this special cycle, which means if a range comes at the end of a cycle, we are treating that as a reversal sign, right? Correction, but reversal sign, and that means we are looking to sell rallies. As simple as that. Now here it looks like also suspicious divergence, even though inside the range there are no divergences. But all that means that sell rallies, let's say on the 15-minute chart, doesn't make sense. It's simply not correct, right? Because we are on a daily cycle, 4-hour chart range, and this is inside the daily range. This is a double cycle by itself with a bullish divergence, which means we require two waves to the upside, ideally on the 4-hour chart, or at least rally with a bearish hidden divergence. Now we did have a potential bearish hidden divergence all the way here. Since this high was broken, do we have a bearish hidden divergence here between the big highs? Let's take a look, and let's see between these highs, for example, right? If we put the lines, this is our high, and we can see we are basically on the same zone, right? So yes, it's kind of spiking here through. We can start the argument, is this high or this high? There are too many reasons why to be careful in that case. If the 4-hour chart does create a bearish hidden divergence, we have then to go to 1-hour chart and start to ask ourselves the question, do we have two waves to the upside in that place? So we did have a potential, and I will explain why this is a potential, two waves on this place, right? But it's only potential. And who can answer my question here, guys? Why this was a potential double cycle and not any longer? Who can try and answer this question, please? Why it's not valid double wave trend line in order to go and make a sell here? Who can try and answer this question? Last two candle rules, well, you mean probably here, right? Let's take a look. The last two candles rule is this and this. That was broken. So the two candles rule is basically inside. So no, it's not that. Ugly angle. Well, with about that, I cannot agree more. It's 100% correct. The angle is problematic. It's almost one shot to the upside, which makes it kind of vertical move. It's very tricky, right? Condition. But what else, guys? I gave you the hint before. At the moment that the 4-hour chart spiked through that, it is not bearish hidden divergence anymore between these highs. Therefore, this high was at that moment exactly, so it's not a bearish hidden divergence to the previous move. But what's also very important here, in that case, look where this high starts from, right here. Now, as I said many times, we can use this high deviation with, like on the MACD, it appears before it appears on the chart. Very possible, right? That happens, especially on such angles moves. But, where comes the but in that case? The two candles rule must be applied, which means that has to be only one move up. Since in that case the two candles were here, this high is irrelevant any longer. And this is exactly where that is only one move to the upside. So if we will want to go and make the sell here, we do require to see that spiking higher. And then, of course, we can go connect the next trend line, and after the breakout, start looking for the sells. But before that happened, we can't. Okay, guys, is that clear? That's what I wanted to explain here. It's very important situation that sometimes we deal with that live, and I want you to know how to approach such situations when they happen. Okay, Kostas, you're asking only spike can we call breakout? Well, the spike is the first thing happens, so when it's breaking, you don't know if it's going to be a spike or a close. If you have higher high, game over. You don't have any more divergence. If it's a higher high on the chart, game is over. It cannot be valid for hidden divergence. Okay? Yes. Great. So this is about the euro dollar. Why did I show this situation, guys? So you remember, it does not change our plan for the short-term bearish. Basically, as long as this top holds, we prefer the sells. We simply prefer the sells because the weekly and the daily are ending cycles and the 4-hour has a range. We would like to go and to make a sell. Okay, very simple. What about the buys then? Well, On the intraday and on the short term, like in that case here, for example, that would be on the 15 minutes, some possible cycle, which we would want to see two waves down, and then we can go for long with this bullish hidden divergence, right? But my view is, personally, of course, I don't love to go against higher time frames directions. That's again, of course, my view only. Yes, you can go and deal with the 15 minutes here, 1, 2, and up to the top, then 3 as a special cycle, 1, 2 to the downside, bullish hidden divergence on the 1-hour chart. Don't see any confirmation here on this part, to be honest. Besides being maybe, yeah, it's a bullish hidden here. That's the only thing we can connect and then start go and trade this breakout. 15 minutes, yes, but again, does that worth it to go against the other cycle? Well, from my point of view, no. It's still, of course, correct. For the short term, again, I prefer two waves with a clear setup and start looking for the sells. Bottom line, euro dollar, bearish for me as long as we are below this top, and this is the invalidation. Next one, euro versus the pound. Euro versus the pound. Previous week we were bearish. That was the bearish hidden divergence. We enjoyed from to the downside until it was blocked on the double bottom, and we got the rally. As explained on the previous week, if the double cycle here, 1, 2, goes above all the Fibonacci's retraces, and it did, kills the divergence, which it did, game is over. The game in that case is over. It's holding above that, which means only bearish setup is irrelevant at this stage. For long run, our plan does not change. We still are looking for the sell. So we want the rally to complete. We want to reform it, and we are after sells. On a daily chart, what it turns to be is triple descending, like this, with a wedging pattern. So we do expect the two waves and further continuation. It doesn't change nothing for us. But we have no setup ready for us at this stage. The only way for us to start and be only bearish again is the breakout of this trend line, because that's the only last two wave we have. We have nothing else. Therefore, euro pound on the short term is acceptable for both directions, with currently still bullish short term momentum, because it can easily make it a higher high closer to 0.90 or up to 0.91, and then start the bigger downward. So the euro pound, which was only bearish on the previous week at the beginning of the week, paid and never got us any re-entry opportunity, turns to be only for the short term right now, and only for both directions, because simply we have nothing clear formed at this stage. Okay, that's all. Meaning, if we have here a bullish hidden divergence with a valid confirmation for continuation on the lower time frame, we can start looking for the further bullish rallies on this place. That's for the euro versus the pound. Euro versus the yen. According to the, let's erase that. According to the weekly, where this Fibonacci comes from, let's remove it. According to the weekly cycle, we are still good to go down to the 38.2, which means 127 zone. 127, 126. According to the daily triple, this one, we are good to go down to the 50, which is basically the same zone, believe it or not. 126, 127. Which means, in simple words, as long as we are below here, for the long run, we are after sells. Right? So we do need to see two waves up, or a bearish hidden divergence, and then we are after sells. That's for the long run. Long run is bearish. What about the short run? Short run, we are inside a 4-hour chart cycle, which is here, boom, 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 right? Or down to here, it doesn't matter how we turn it around. We have a bullish divergence. Now, can we make this one into a confirmed ending cycle? For that, we need to go to one lower time frame. And on one lower time frame, we have a cycle by itself. Here, 1, 2, and even here, 1, 2, with the same divergences. Look what it does besides that. We have two cycles on the short term providing us bullish divergences and bullish convergences. Meaning that on the short term we accept what? Exactly, we accept the buys. We got the confirmations for short term possible buys. This is the invalidation for the short term. So it can start do something like 1, 2, 3, 1, 2, and rallies for us. So every two waves down followed by bullish divergences could be considered as a buy opportunity. It could do something like that for us, a bullish hidden divergence, for example, right? And we can then start to look for confirmations for this buy. Andrei, I agree with you. Pullbacks should be buy, but we do have to get the confirm. If you want to try the 15 minutes, 1-hour chart have to confirm you, or at least not to interrupt you. What do I mean? If you have this, look. This would be a bearish divergence on the 1-hour chart, right? And then 15 minutes, meanwhile, gives you two waves and breakout. Will that be valid? No, because the 1-hour chart would be against you. And the 1-hour chart has to support or at least not to interrupt, which means at least not to be against you. Then your 15 minutes is very smart trading. Okay, very important. Very important. Okay. Okay, so that's the thing here. In other words, once we get the corrections to the downside, ideally followed by the bullish divergence, of course, we are after the buys. How far can we expect that to go? For that, we have the answer for the cycle. So the first one was reached. This is the immediate cycle. Reach the target, so that makes it irrelevant. If we take a look on this triple cycle, the bigger view, 1, 2, 3, we have here the 131.20. If we take a look on the 4-hour chart full picture, then we have the 132.40, and mainly this high to be cleaned, because there are a lot of stop losses located right here due to the bearish momentum, right? And it will be a very classical zone for the market to start and clear it. Once it does, this is the zone to start looking for further sell opportunities. Note, due to the fact that weekly and daily warnings still remain bearish, the 1-hour chart trading is of course more aggressive. You understand that, right? Because we go still against the higher time frame, which makes it more aggressive approach. We have to remember that, because the risk is accordingly. Okay, guys, don't forget such things. Okay. That's all for the euro yen. So we accept the short-term rallies up to here, ideally even higher, to clean some levels, and then we will be looking for the long-term sells. Okay. Costas, what is the question? We have one straight leg down in daily, so it's healthy to have a correction. 100% agree, but you know, Mr. Market not always um, behaves like it's healthy or normal or expected, right? Mr. Market can do whatever he wants. That's why I always say, let's trade facts, not expectations. Even with two false breaks, so what? This is 1 hour chart. Daily and weekly still bearish, so of course it's aggressive. You're against daily and bearish. Who cares if it's two false breaks or not? You are against the bigger time frame. The safest trading always is with the higher time frame. So if you get two waves on the 4 hour or the daily chart, or a bearish hidden divergence on a daily chart, this is the safest trading. You are going currently against. Why wouldn't it, just for example, why wouldn't it just do something like that? Who said it cannot? It could. So your 1 hour chart trading is against all the higher time frames, which makes it aggressive by its own. Okay? Remember that, guys. Okay, so that's for the euro yen. We are short term, we accept rallies with invalidation of this level. And long term, we are looking for the sell rallies. Sorry, for short term, buy valleys, basically buy retraces. We do accept the rallies, and on the long term, we are looking to sell these rallies. That's the bottom line. Next one on the list, Mr. Euro versus the Canadian. The Euro CAD, after breaking this high, remember what I told you guys, like, I don't know, 100 times? Don't marry a trading idea, trade fact. So here it was an amazing opportunity. We had a bearish bearish convergence, sorry. How more could we expect, right? After such, what do we want? We want two waves pull back and breakout. Very simple. Is that enough for a guarantee it's going to work? Never. That's why I always say, don't marry just a trading idea or just a level. Don't block your mind that the market cannot develop something else. Mr. Market always knows what it wants to do. Always. And if it decides not to happen here, it decides to extend its own cycle. And now I want to show you a few things, guys, here. This is the weekly cycle which we were looking to trade and to work with. Right? Did the level of 100 really change for us from the previous week? No. We were looking for the possible sells here, and we are still looking for here. The divergence is still developing. So technically, nothing really changed from the weekly cycle. Nothing really changed from the higher cycle. The daily cycle, let's take a look deeper and let's see what do we have here. Right? We have this level. So basically, we are still inside acceptable zone. Will that be respected or not? No idea, but we are still in the zone. As per divergence, there is a very good chance we're going to shoot for some kind of extreme. That's a possibility. So why would we, you see basically what changed? The only thing that changed was the 4 hour chart setup. Inside the daily and the weekly, we are still in acceptable zone. But the shorter term noise make it look so dramatic. That's why I always tell you guys, trade facts. And the fact was, we never got two waves pullback for a sell. Which means, so we had a convergence. So what? Is that a guarantee for something? No. Don't be surprised if that doesn't hold. Weekly and daily both provide higher time higher levels possible to be reached. Look at the monthly cycle. Who said we cannot go and hit it all the way to the top of this range? Why not? Just because the 4-hour chart had a convergence? So what? Look at that, guys, and decide, can we go further? Right? Further towards the top of the monthly range? Of course we can. Will that be still correct? Of course it will. That's still a divergence developing on a monthly chart. Same with the weekly. Right? You see that, guys? So at the moment that this setup does not follow the expectation, don't find yourself praying to Mr. Market, but I had a level, but there was a divergence, but there was a convergence. So what? Trade facts. Is that holding? Does that respecting the view? No. Instead of fighting and then regretting for that for 300 pips or more, listen to the market. And if the market does not give us what we expected, why to fight it? Maybe instead if we listen to that, we can enjoy the rally. Because weekly and daily still provide higher levels. Why would we force? You understand what I'm saying, guys? Right? Whatever looks, there is a great saying about it. If you are looking at something that looks golden, right? You are looking at some jewelry and it looks gold, maybe it's just a golden spray or golden cover. Maybe it's not real gold. Not everything that looks golden is a real gold, right? And don't be fooled. Don't force your view. I was the first one to say I'm looking for these sales. And I was the first one to tell you exactly the opposite previous week when the level was invalidated and we never got a setup. Ignore. Right? Instead of fighting, just listen to the market. It's very, very important. And I say that because I see the conversation sometimes in the groups. I see the private conversation that keep coming like, but why is it rallying? And I always answer, why not? It invalidated one scenario, which means the read we had was wrong. If the read we had is wrong, that means the cycle could extend further. We have two choices: or try to force our view on the market and say, but, right? And try to convince the market that we are right, or listen to that. Okay. Now I want to answer a few questions here. Rajiv, daily. Hold on. Where is it? On the 1 hour chart, it's still a first cycle. What do you mean? Which one? Where? And what is the first cycle? What does it mean in the first cycle? Oh, okay, you got it. Okay, no problem. Okay, guys, so before we consider to resell according to daily, weekly stuff, it's not bearish any longer since the moment it broke this high. Game is over. No bearish. So as for now, it remains, after breaking it, the invalidating, it remains bullish. And who knows, there is a great chance that maybe it will even take us towards the 161. Why not? Is there any limit really for that? It still will be the top of the monthly, remember? 161. Why not? By the way, this 161 would be a classical. Who can tell me what it will make? 1, 2, 3. And classical double cycle here. This is a possibility. I am not claiming we are going there or anything like that, but the fact is that we have no Fallsbacks right now. We have no convergence right now. We have no 3+2 to the downside right now, which means no sells right now. Okay, and for your question, Costas, basically not just for your question, I want to show and explain here. For those who said how do we trade this situation, Andrei, you were talking about the 15 minutes, right? What did I tell before? Remember, 15 minutes can be traded when the higher time frames are not against you, right? So the 4-hour chart was rallying, no divergence was developing, only now it's developing, right? 1-hour chart got yourself a bullish hidden divergence, right? Well, it had for you this block here, little block here, right? It reflected by the correction down until the bullish hidden divergence. 4-hour chart not against you. So here is my question for you. In that case, 15 minutes can be in play, yes or no? When the 4-hour chart does not give you signs against you yet, 1-hour chart does give you the further continuation up. Can that be applied and used on the 15 minutes? Yes or no? Andrei, you are right. Anyone else wants to try? Exactly. The answer is of course yes. 4-hour chart not against us. 1-hour chart with us. Of course it can be used. Okay? And what do we do at the moment that the 4-hour chart starts to be against us? We are waiting for the pullback on the 4-hour chart. Right? So if that becomes, by ideal of course, a bullish hidden divergence, then we can go and attack the 1-hour chart. Right? That's what we do. It's very simple. All these steps are very, very simple. Okay, guys? It's developing. It's developing, yes. It's not there yet, not completed. It might go and be, it might maybe not be. If it doesn't, if it keeps creating higher highs, no problem. So 4-hour chart not against you. But it's potential. So let's see how it goes. Okay, now I want to answer a few questions here. Dobra. Oh, Dobra, that's why I said at the beginning, go over this report, please. Watch the video and you will understand how to use this report. How do you trade your trades? It's really up to you and your strategies. What we do in the live room, we set up the directions and the levels up to where or down to where we can go. We set up the invalidations up until where our view is relevant. Okay, then every trader trades with his or her own strategy or strategies according to own comfort. I'm not forcing any strategy. It could be any of mine, any of yours, manually, automatic, whatever. What we do is we set up the direction according to the money flow, choosing what do we trade, okay? So that's all, guys. That's basically what do we have. Costas, you know the answer. If you take a look, you will know the answer. Okay, so that's for the EuroCAD. Bullish it was after the breakout of this high. Bullish it remains. Okay, Andrei, Scorpio is just a beast. Well, it's a beast for you, you know. There are traders that think that for them the Scorpio is the best. I admit, even for myself, one of the best. There are those that cannot work with Scorpio, and that's fine. That's fine, really. Every trader has its own comfort. It's very important to find it. Okay, Scorpio Dobra was one of the systems I use. The strategies I use you can see in the members area. In the members area, all the strategies me and my team trade are all the names are there. Okay, guys, let's continue. Euro versus the franc. Here we go. According to the weekly, I'll make it simple. According to the weekly, we have nothing clear. According to the daily, we had triple to the upside. Boom, boom, boom. It could be called special if you want. It doesn't really matter. The answer is simple. We are looking to sell rallies. Right? That's what we look to do. The first place we are expecting this pair to approach and reach was and remains 38.2, which is the level of 114, 113. Okay, digging deeper, 4-hour chart had a special cycle or triple cycle, does not matter how you name it, matters what it represents. The way it looks, it's kind of building this. Perfect. Which means, by ideal, according to the 4-hour chart cycle, we accept 38.2 up to 50. This is our zone. Right? That's for the short-term retraces up. Then we start looking for the sells. So the Euro franc long-term sells did not change currently. Is this trend line correct? Yes or no? I have no, only no's. Very good. Why not? No bearish divergence, only higher highs. This is wrong trend line. Do we have this trend line valid? Yes or no? Let me enlarge it for you so you can see here. Is that valid, guys? Yes or no? The divergence is potentially still there, might be broken. Exactly, but the risk is huge, right? We are talking here about 100 plus pips risk for Euro franc. Really, it's crazy. For this pair, it's crazy. So what do? We are waiting for clearer setup with the 4-hour chart. Once we get it, we can drop to the 1-hour chart and start looking to squeeze the trend lines and the divergences into the best entry point in terms of risk reward, of course. Right? So the Euro franc plan was and remains bearish, sell the rallies. As we can see, currently the conditions don't really provide any sell. Therefore, it remains for us in the watch list. Okay? That's very simple for this pair. Euro versus the Aussie. Kostas, remember the previous week conversation? We were talking about this range, and I told you it must break down if we want to really get it continuing, because if not, this will turn to be what? Just a corrective cycle. Do you see that? This is exactly what it turned to be. And instead of that, this is what it develops for us. If the range is not broken and we don't gain the momentum, this is a warning sign. It's very important to understand. So before we are dealing with the 4-hour chart, let's take a look on the weekly chart and remind ourselves what do we have. We have a false break on the top, we have a false break on the bottom. It makes it a range. According to weekly cycle, we are building here. Very simple. Triple descending cycle, which means each leg is getting smaller than the previous leg. The divergence here is irresistible, not available for an argument, and the duplication level, which of course is irrelevant because the second leg is longer and higher, but the level here is strong right on the top of the range. The level of the next cycle, in between the next leg of the cycle, is leading us to the same place, the classical zone 160. A psychological number and number under divergence and the top of the weekly range with a daily or 4-hour in that case cycle by itself. 1 plus 1 normally leads to 2. This should be the top. How do we refer to this top? Because all the time frames are involved. We need false breaks on the 4-hour chart and lower lows, or at least on the 1-hour chart because the daily was involved. And now I have a question for you guys. Do we have two false breaks on that scenario? Yes or no? It's very, very tricky here. Very tricky. And it happens exactly on such weeks like the non-farm payrolls. But I want to challenge you with this one. I have a yes, I have a no. Who else wants to try? I have another yes. Okay, let's start. This was the first. This is the first high. Is that relevant, yes or no? No, exactly. Because of the two candles rule, right? Here we have nothing to do, it's irrelevant. The second high that was broken was right here, right? Between these two. And now I have a question for you. Is that a false break, yes or no? With this top. Oh, now you got me surprised to the good side, guys. Why no? Why no? If we take a look on the two candles rule, is that a correct view? Here and here. Is that correct, yes or no? Exactly, it's not. It's not, because this red candle has a lower low few candles before, still same green here. And this is not a breakout, it's right on the same level. Right? And we can say the same about this one. If this is the high, where is the previous important high here? So there are too many places why not to deal with that yet. Okay? You see that, guys? So what do we do in that case? We're waiting for clearer, better setup. Clearer, better setup in that case, because weekly, daily, 4-hour, all are on the zone. What could happen in that place would be one false break to be confirmed, one divergence to be confirmed, and we will need to confirm that with triple double, which means we will need to drop. We can work with the 1-hour chart, we can work with the 50 minutes if the 4-hour is in play, and it is, and we can start working with 1, 2, 3, 1, 2 breakout. Do we currently on that conditions have triple double into play here? The answer is we even don't have this, right? Beautiful. Therefore, we do want to go for sell. We simply have no setup. So if we ask ourselves the question, we have a triple three-step trading, right? 3 steps trading. Level, confirmation, setup. Cliff, thank you very much. You have a wonderful day. Make sure to watch the recording, okay? Ciao for now. If we have 3-step trading, guys, level, confirmation, and setup, and one is missing, in that case the setup, that means we cannot and we should not trade these directions yet. Okay? We want something clearer. By ideal, what should happen here, by ideal, is some kind of clearance, some kind of movement, and one more high. And then it should be much better conditions. By the way, for all those who trade the intraday, you see these noises you have to deal with, guys? All that are noises that intraday trader have to deal with. While if you take a look on a daily chart and the weekly chart, suddenly everything looks so clear. right? You see that? But on the intraday, oh my god. And that's even the 1 hour chart. If you drop to 15 minutes, it's a headache. Intraday trading could be when the higher conditions are clean. Then the intraday trading could be profitable. When the higher conditions are not clear, intraday could be a mess. Okay, remember that. Very important. All right, so Euro Aussie. From my point of view, it's neutral at this stage. I would say we can still look for longs. I would not say so because we are too close to all the levels. Top of the range, weekly cycle, daily cycle, 4-hour chart cycle. In such cases, I prefer to skip. I don't see currently any further than that. Okay? Olena, thank you very much. You can ask everything you need in the telegrams. Okay? That's why we have these groups. Don't hesitate. Just ask. That's what we have the groups for, okay? If you don't ask, we can't help. Makes sense, right? Okay, so that's for the Euro Aussies. So we are looking for the sells only, but we currently don't. We are missing the setup. Okay, so at this stage, it's neutral, but our direction would be to look for the sells. Next one, and the last one for the Euros, Euro versus the Kiwi. According to the, well, let me make it a bit bigger for you here, guys. According to the monthly, falls back on the top, on the bottom, falls back on the top, make it a very possible ranging to be traded, which means we still have potential room to the upside. That was a triple descending on the monthly chart, which even means for the very long term, we have much higher numbers. But this is a monthly, no one is going to trade until 2021, most likely, right? So we start going lower a bit. According to the weekly cycle, this is where it starts to be very interesting, because on the weekly cycle, we do have here a very interesting level. We were very, very far to the 161.8, very, very close, sorry. We have the divergence, and on a daily chart, we have a cycle by itself. Triple descending, 1, 2, 3, right? Or even a special we can combine here. 1, 2, 3. We can build up here this situation, which means as long as this stop holds for the longer run, we are better looking for sells. On the short term, we had beautiful conditions of triple, 1, 2, 3, and 1, 2, right? Which means basically very simple, that as long as these stop holding, we are looking for sell continuation. Very simple. Previous week, we got involved in these sells, right? After another triple double, we got involved here. We moved the stop loss to break even in such cases once the risk reward reaches the 1-to-1, and boom, out of nowhere, turning around, rallying to the upside. What do we do in such case, guys? Who can tell me? Are we continue to force selling? Are we switching to buys? What do we do in that case? Who can help me out here? Exactly. Neutral. For the long run, we have nothing to do. Very simple. We have no setup to follow. Nothing to go with. We need to wait for the market to recreate these conditions. Currently, the double wave is here. This one has to be broken in order we discuss about a possible sell. Right? So on the same side, the daily can make the double wave correction a bit longer, so it can make something like, just a second, like this. 1, 2. Is that possible? And then for a sell? Right? Once the first scenario does not follow, we are kicked, in that case in break even, we are kicked to the upside. What do we do in that case? Simply nothing in terms of forcing. It's too easy to say, but I wanted to crash, I wanted to move, we have divergence, we have everything. It's too simple to try and convince the Mr. Market that we are right. But when we try to convince the market that we are right, the market can do what? The market can bite. So the Euro Kiwi has nothing clear yet for the longer term, which makes it, according to the levels and the setups, completely acceptable for both directions tradable, and the short term only. And the best way to trade short terms is according to the last momentum, which is normally gained by divergences. In that case, that was bullish divergence here. No bearish divergence against us at this stage, so the pressure short term remains still bullish. Okay? Which means buy retraces is still a good thing to look at, as long as, and this is the last trend line for the longer cycle, as long as this one holds. Very simple. What do we do if we get this situation and we start to develop then the bearish divergence here somewhere? We're then starting looking for the short-term retraces down. We are going with the short-term momentum, which is designed by the last divergences. But for the long term, if we have nothing clear, we have nothing to trade. It is that simple, guys. It is that simple. And what is a very common mistake traders do? They look at that and they say, but I want to trade it. It has a divergence. It has to move. And then the worst starts to happen. We start to imagine scenarios. We start to imagine setups. We start to rely on some weird things like pure support resistance. They cannot work, and they will not work if the higher time frames have no agreement. Support resistance can be monster trading tool, exactly like trend lines, exactly like Fibonacci's, exactly like anything else, if it has a confirmation from the higher time frames. If it doesn't, it will not work. Okay? Remember that. Euro Kiwi, bottom line, short-term trading only. Both directions are completely acceptable at current moment. Short-term is bullish. It was the bullish hidden divergence here. No divergence against us currently developed or developing. Therefore, there is most likely still more to go. This is the invalidation, the trend line. We are done with the euro pairs. Any questions as for now, guys? About any of the euros? If yes, please hit me now. I agree. Some of them are tricky pairs. Agree. Don't be surprised from that. On non-farm payrolls weeks, it's very popular. Just be smart enough, guys, not to fool in traps the market might create. That's all. Don't force. I have a question for you. What's best? Try to trade 15 setups during the week just to trade and have purely 50-50% chances, which of course most likely gonna be even worse, or find one setup or no setup, but on the conservative approach, and from one side don't profit, from the other side don't lose. What's better? Second option, exactly. Exactly. When the moves are not clear, the chances to end up in profits drop. If the chances drop, then when we require 1 to 2 risk reward, our chances are even lower. Because 1 to 2 risk reward, we are asking from the market to get more than we risk. If the conditions also are against us, then our chances to end up in profits are even lower. Why to force? It doesn't make sense, right? Previous week had a lot of great opportunities. Maybe this week again we'll do that on the next days. Currently, you can see we went over many pairs from the eurozone. On euro yen, even though it's aggressive, has clearest conditions. The rest, well, euro CAD as well, yes, to the upside, right? The rest, you saw yourself. Perfect. Pounds, pound dollar. According to the monthly and the weekly, theoretically, we can still run towards 145, 146 for the longer run. Since the moment we had the divergence against us turn to be a fake convergence, most of the times, and again, it's not like a mandatory or anything like that, but most of the times it turns to be to the drop until we have a bullish hidden divergence, then continues. Most of the times, right? That's from the weekly, so we still have the reasons for possible sells. On the daily chart, we had a cycle for us that's weekly, but also seen on the daily. We technically need to go towards the 134, or maybe even the 131, 132 here. So technically, we still have the room down for that, right? What happens here on the daily chart? We got a bullish hidden divergence. No, we don't have a bullish hidden from weekly. And this is a continuing divergence, right? So basically, this could turn to be a double wave correction. And further up, definitely a possibility. Where is our critical scenario for that? The break of this trend line. If we break above that, which means approximately the zone of 140, 139.70, 140, that would possible be a breakout for the bulls. Okay, but currently we don't. If we take a look on the developing cycle, we had triple cycle to the downside, which was here. 1, 2, 3. We had a double cycle correction, which ended up here. And according to the magnet zones, we had 2 of them. One of them was holding and, well, reached on the previous week right here. We cleared this level and the rallies comes in. The next level is right on that place. See that? And the next one is right here. So this is the important one, this is the next one. So as long as this trend line holds, we can look for sells. How do we do that? We confirm 2 waves on the 2 waves to the upside, or a bearish hidden divergence. At this stage, we are creating a bearish hidden divergence. To confirm that, we need to drop to the 1-hour chart, and on the 1-hour chart, there must be 2 waves up and a divergence by itself. Et voila, here we are, and I have a question for you guys. Do we have the 2 waves up? Is that a correct 2 wave up, first of all? And do we have a bearish divergence here, second of all? Yes or no? It is, Andre, exactly. It is. It is. So we have no divergence between where to where, between this high to this high, right? It's going up. No divergence in this place. Why not to take this high? Who can answer my question here, guys? Why not here? Two candles rule. Thank you very much. Thank you very much. What does that mean? We can use this high, this very high of the MACD, when the entire move here doesn't have two candle rule correction. In our case, this two candles rule was broken down even before that. And game is over. When that happened, game is over. So what we are waiting for? We are waiting for the recreation of the 1 hour chart. If, let's say, guys, I have a question for you. Let's say from here, we have a move up now. And divergence here. Will that be a valid trend line? Yes or no? Well, I can't enlarge because I draw, but let me redraw here. Think about it, guys. Rajiv, very good. If we now have this rally and some kind of divergence here, will that be a valid trend line? Yes or no? If there will be divergence, Oh, guys, too many yeses. If there will be divergence, is there two candles rule anywhere on the current view? Here, two candles rule involved? No, I didn't ask if we drop lower. I said if we rally from here. I said if we rally from here. Will that be valid? No two candles rule here. No two candles rule here. It cannot become a trend line. Do you see that, guys? That's what I call forcing a fall, forcing trading. Because just imagine that. How many traders would actually go and take this breakout, for example? How many traders would do that? Or would say, this is a trend line, I take it, whatever it is? How many? How many of you would do such things in the past and then wonder why it turns to be a loss? How many did these things in the past? That's the little details that makes the huge difference. It's not about charts. It's about timing. Timing. Timing comes in validity of a setup. And by the time a valid setup comes into play, there were at least 2 or 3 setups that failed. All the traders that tried before gave up, and then they free the room for the big money to take the control. Timing is so crucial, is so important. And timing is lying down on the lowest details. Can that still crush one way? Yes. Does that mean we have to trade and force it? Of course not. Of course not. We are waiting for the right time. Remember, guys, what I always keep telling you. Trading is not about charts. It's about valid setups, which comes with patience, which comes on the little details, the same little details that simply not enough traders pay attention to. Don't put yourself in that place. If it's not valid, don't trade. We want the setups that give us the best starting point. That's the only way how we can separate ourselves from anyone else. Starting point. Your starting point of the position has to be different than what others do. Because us and everyone else know the same thing. Same Fibonacci, same trend line, same divergence, same everything. It's popular, it's out there, it's available. Not everyone. Well, actually, 1% only. Pay attention to the whole picture, to all the things together. You have it, you have yourself the chance. You don't, pay attention to that. Don't be surprised if things fail. Okay, guys? Makes sense? So that's for the pound dollar. We are bearish as long as we are below the trend line. Okay? We are waiting for the setup. As simple as that. If the trend line is broken, pound dollar comes to be valid for both directions, because then it might open the doors for the 145, 146, the same level from the weekly. Okay, so if the trend line is broken, this trend line of course, then it's not only bearish, it becomes to be both directions tradable. So our invalidation basically is exactly this. Why our invalidation is a trend line in that case? Because it represents the two waves retrace from the daily chart. That's all. Any questions regarding the pound dollar? Yes or no? Maybe. It could be, Andre. It could be right from the trend line. It could be a bit earlier. It could maybe even try like a false break, right? Right there. It could. It could. I agree with you. The closer we come there, the better. Let's say the safer, right? Let's see. Let's see. It will be interesting, right? It will be interesting. By the way, you know what could happen here pretty easy, guys? This. 1, 2, 3. What do we do in that case? Right to the trend line. Right to there. What will happen in that case? That could happen before the non-farm payrolls. Very, very possible. Right? Exactly. In that case, we'll still treat it as a double cycle. Exactly. Because it holds the higher time from invalidation. Beautiful. Right? But that could be a scenario. So it's very early to know yes or no. It's just a possibility, and that's why for us the fact is very simple. For us the fact is bearish. Therefore we are after sales. Game over. That's all. Okay? Fact. Bottom line. Next, pound versus the yen. We were bearish on the pound yen since here. The convergence we got. Sold every opportunity. And today, I'm very proud to say, guys, we did it. We smashed it. Smashed it down the way to our target, which was 146. Why 146? Because of the triple cycle we had before. This one. 1, 2, 3. That was an amazing run and a very beautiful move with tons of sell opportunities on the way. Target reached. What's next? Everything is possible from here, right? Everything is possible here. According to weekly, what do we have? Bullish, hidden divergence. According to daily, what do we have? Bullish, continuing divergence. Where is the only problem with that? We have no two candles rule in play here on the daily chart, which makes it tricky because it could easily make this. It will not change nothing of the weekly. It will just recreate the daily, right? So if the daily does not support us in terms of validity for the divergence, we have to be careful with the daily. We can only rely on the 4-hour. What does the 4-hour have for us? What is this? Exactly, triple cycle. With divergence on the ending part and with the bigger divergence, of course. Well, it's actually not really classical even. So, look what do we have. Bullish hidden divergence from the weekly, trend line from the daily, retested broken trend line from the daily. Here, 1, 2, retest number 1, retest number 2. And the psychological zone, 145. This is exactly where we bounced from. 145. We are looking at a level, we have an action zone. We are looking on the bottoms and look at the days. 5th to 6th. Look at here, guys. 6, 8. All in the same place. And this is an engulfing. And the 1 hour chart, even by itself, provides us here a triple cycle on the last leg. 1, 2, 3. Fact is, we have nothing for the conservative view. We have too many reasons for the aggressive view. Levels, divergence from the weekly, 4 hour chart cycle, 1 hour chart cycle, bottom line, short-term rallies versus this top aggressive approach. We have nothing for the conservative. Is acceptable, which means 2 waves retraces or bullish hidden divergence, and we can go and start looking for rallies. The levels up are acceptable up to 50% of this little cycle is here, 147.50. It has to clear this table. On the view here, it's 147.9. Oh wow, guys, this is a bank zone. Look, I didn't see that before. It's a bank zone. Big candle with inner candles with a big breakout. This is a bank zone. This is where we are aiming, right here. Okay, so yeah, it definitely can turn to be a triple cycle here, then double cycle down, and then another push up. Yes. Okay, so for the conservative, we have no reasons yet. For aggressive, we have more than enough. A bullish hidden divergence from the weekly. We have a bullish trend line from the daily. We have a retested situation here. We have the divergence. We have no valid 2 candles rule, but that means very simply that we can get the pullback and then one more low. Definitely a possible scenario. And the 4 hour chart cycle was over. 1 hour chart cycle is over. Too many reasons why yes for the aggressive approach. Okay, bottom line, pound yen, short-term trading only and aggressive approach only versus this low. We can start looking for the buys. 147.50 up to 148. This is target number 1. Target number 2 is the possible pullback from the 4 hour chart cycle, which takes us back to 149.50 up to 150, 151. All that is valid is as long as this low holds. Nick, sure, but the indices are the last part of the report. Sorry, I'll do that only then, okay? Because I have to cover all the forex first of all. Okay, sorry for that. So that's for the pound yen. Next one, pound franc. According to the weekly cycle, we were on the bearish side. Take care, Nick. Watch the recording. Enjoy your day. We were on the bearish side. We got the bearish move as we wanted. What do we have now, guys? Here, bullish, hidden, and daily, bullish, regular. Where the problem comes here, exactly like with the pound yen before, that we don't have what? Valid 2 candles. Which means we cannot rely on the daily chart. According to the 4 hour chart, what do we have here? Exactly, triple cycle. False break, 2 false breaks. With a bullish hidden divergence creating from the weekly cycle. Right? Is that conservative? No, because we never got any higher highs. Not daily, not 4 hour chart, not 1 hour chart. Do we have 3 waves up? on the 4 hour or the 1 hour? No. Again, no. So the only thing we do have here is again a level and a bullish divergence from the weekly. So pound franc, I would not deal with nothing for the long term yet, and only for the short term, for one reason. We can easily get this to clear here the level with the divergence, make a valid 2 candles drop, and then go for long-term buys. That's why currently I think only for the short term, and both directions are completely in play. Why? Because this triple cycle from the 4 hour chart could get us the correction. It could be in a range. It could be 2 waves and then one more low. So this is exactly where the long term becomes irrelevant and the short term becomes relevant. Again, for the corrections only. Pound franc, short term only, both directions are in play. Until we get a clearer picture for the long term setup, like we had on the last few weeks with the move down. Okay, guys? Very simple. Very, very, very simple. And that's all. We don't need to force, but we have this, but we have that. Very obvious and clear. Both scenarios would be here valid technically. Why would we go and start forcing anything here to happen? Doesn't make sense, right? Perfect. So that's for the pound franc. Next, pound Canadian. Here we go. We got a breakout on the previous week. We were waiting for 2 waves retrace. Never got them. And at the moment we got the invalidation, we got it back to bullish run. Up to where the pound CAD can go. According to the weekly cycle, it's in a beautiful zone. Right? The weekly did not change. We are still there. We still have a bearish divergence forming. Nothing changed. We still have the magnet zone. So far, so good. According to the last cycle we have from the daily, it takes us exactly to the same place. If we split that into double, our duplication in that case is not too far away, right here. So we are approaching to the final level of the rallies. Do we have any bearish setup? Yes or no? Besides the level. Just besides the level. Do we have any setup? Exactly. The answer is no. Therefore, the current momentum remains still bullish. As simple as that. What will invalidate the bullish run? False breaks, convergence, or 3 waves down, 2 waves up. At the moment we got it, we have the sell again. A valid sell setup, I mean. As long as we don't have it, pound CAD remains bullish. As simple as that, guys. Is that okay? And we can here again start to force, but there is divergence. But there is a level. We can say tons of things, right? We can say tons of things. Do we have a reason for a stop here? Yes or no? No, exactly. So that's all. Can we look for buys against daily divergence? If your correction comes on a daily or the 4 hour chart with the bullish setup, the answer is yes. Until the moment you finished the false breaks and you got a convergence. And that moment, game is over. At that moment, exactly, game is over. Okay? All right, that's for the pound CAD. Pound OZ. This one is ultra tricky. Why? Because according to monthly, we have no direction. According to weekly, we have theoretically possibility up to 50%, which makes it here. And even though 38 too has higher levels, 182. So pound Aussie can basically go and rally towards 182 or 190. If we treat that, of course, the triple descending cycle. The thing is here that we got a triple cycle to the upside, 1, 2, 3, and this top is still holding. The divergence is there. On the daily chart, we also got a triple, 1, 2, 3, and a false break. So basically, as long as this top holds, technically, this is the invalidation. Technically, pound Aussie is bearish. In order to enjoy from this bearish cycle, we need to go to the 4-hour chart and start looking for the possible things to trade here. That was a false break on the top. That was the false break on the bottom, which makes it a possible range. We are now, and again, I want to remind you guys, we are bearish as long as we are here, below the daily top. This is the invalidation, right? That's the invalidation. According to that, we are bearish, which means we need retraces to the upside and look to sell. We have a trend line here, which is valid. Do we have a divergence on this trend line? No. Right? We have kind of same double top, which means we cannot call it a real hidden divergence yet. And even on the 1-hour chart, on the rally of the last trend line here, we cannot call it a divergence, which makes it what? Untradeable on the current conditions. Exactly. Pound Aussie technically is bearish as long as this top holds. At the current moment, very current moment, has no valid setup. If it improves that for us, we can then look to go with the breakouts. Yes. Do we have any reason to trade it currently? No. That's what we call don't force. Because let's admit it, in every single other conditions, such weekly cycle looks amazing, right? Like, wow, let's sell. Or such daily cycle, let's sell. But when you dig deeper, that's what you find yourself dealing with for a couple of weeks, even more. And that's where you start scratching your head, like, why it's not moving, right? Daily and weekly are perfect, but that means it's going to take time. And while it takes time on the higher time frames, on the lower time frames, we are kidding ourselves by scratching the head, like, why it's not moving? I want you to remember that, guys. And when you start to ask yourself the question, you figure out that there is no really valid setup. We are now sharing the top, double top. It cannot be recognized as a hidden divergence on a double top. On the 1-hour chart, if we squeeze this trend line, we have no divergence. Very simple. So we need to wait. If we go below this trend line, let's say on this view, if we start to do this, right? Breaking below that would give us a huge risk. In that place, we would want to see the retrace and another confirmation. So second confirmation in the breakout. We have that, we can discuss about ourselves. But as you can see, currently it's simply far away. So pound Aussie, we are bearish as long as this top holds. We currently have no setups, no valid setups to deal with. Pound versus the Kiwi. Well, this one, I'll make it short because we covered that very, very deep on the previous week on all the views. That's the big cycle we are talking about for the very long term. For those of you who are looking for some pension money, according to the weekly cycle, and the levels, we also have the levels higher. So that meant for us that every 2 waves down on the daily or a range, we are 4 buys. We had false break on the top, we had false break on the bottom, which makes it a range. That means every time we're close to the bottom of the range, we can start looking for possible buys. Digging to the 4-hour chart, we never, after this movement here, we never got 2 waves down. What did we have instead? Another bottom. So it makes it kind of a triple low and a very tricky setup. There is no divergence here. There is only kind of divergence on this situation. So technically, this is still valid. It's a bottom of the range. Conservative, it cannot be because it has no clear setup and divergence. So what we are doing here is only short term. For long term, there is simply nothing. The short term is if we do have 2 waves retrace and a breakout with bullish conditions, which means bullish divergence. Since this is the 4-hour chart, that could happen on the 1-hour chart. So if we get here 1, 2 with a bullish condition, bullish divergence in that case, or a bullish hidden divergence, we can talk about a long it. Only aggressive and only the short term, because for the long term we have nothing clear in terms of divergence, in terms of higher highs, and in terms of 3 waves up, 2 waves down breakout. Therefore, only the level is there from all the higher time frames, and that's why the trading currently is only aggressive and only for the short term. Okay, that's all for the pound kiwi, and that's all. We covered all the pounds. Any question? Any question about this one, or any other of the pounds, guys? All right, let's move on then. Dollar pairs, dollar yen. We were bearish there. We are still bearish for the longer run. We have no divergence against us on the drop. We do have. Let's take a look here. Yeah, we do have on the bigger view the double cycle down. This one. Right? That's the only place where we have it, which we have to respect. The daily cycle has 1, 2, well, no, why it's not moving? Huh? Okay, we have here the breakout into 1, big 2 and 3, or in the lower view 1, 2, all the way down and 3. We can cover that into very simple cycles on the same place. Aggressive false break on the 3rd spot of the alternative trend line happened. Now it might be the 2nd one, and it is going into here. Boom, right? This one. That's all. That could turn to be. This is 105 zone. This is a psychological level. False break. Kicker pattern. Perfect conditions for aggressive buys. Why do I say aggressive? Because we have no higher highs, nowhere, and we have no 3 waves up, 2 waves down breakout, which makes it aggressive. Only level with confirmation of divergence from weekly and the daily. Okay, so bottom line, as long as this low holds, retraces are acceptable to be bought. Okay, only for the short term, of course. Targets for that situations. Last cycle of the double cycle, 107.20. Targets for the bigger cycle are 108.50 ish, up to the bigger cycle, the complete 50, 110. All that is relevant as long as this low holds. Only aggressive, only for the short term currently. Only due to the fact that we have all the levels and the divergences from the higher time frames. That's where the aggressive is acceptable. And the second false break, of course, came into play. Okay? Dollar yen is bullish. Dollar Canadian, bullish it was, bullish it is still for us, on the short term only. And we are approaching to here, which is the 131 zone. The divergence on daily did not complete. The divergence on the 4-hour chart did not complete. We have no false breaks, no convergences, only bullish run. 131 approximately could be our target. For that, we have the trend line from the weekly. We have the bearish hidden divergence potentially to form there. If not, bearish continuing. Daily cycle by itself. That's all. 130, 131. Dollar franc. We were bullish on the previous week and all the way to here. We cleared this level. We became bearish again. We were waiting for the last trend line to be broken, which it did. Right? And here comes the question. So what's next? Now I want to remind you guys, weekly has no divergence, which means we are expecting to go for sell. And daily cycle, if we take a look on this one, still provides us, because this was a special, still provides us 0.96 as a possibility. Right? 0.96 still possible, which makes it very, very simple. We are currently in a false break on the bottom, false break on the top of possibly the range. If we have a bearish divergence on this rally, like a bearish hidden, we can go and sell. After that, after another leg down, we can go and see another rally towards the 0.96. Very simple. Dollar franc, short-term trading only, both directions are in play. As simple as that. 1 hour chart, our trend line is here. Do we have the divergence there? No. Can we short it? No. You see that, guys? This is how you answer yourself the questions. Do you have the setup? So we need, in order to make it very valid, correct sell, we need the 4-hour chart bearish hidden divergence or the 2 waves up on the 1-hour chart. Currently, none of them are in play, even not a combination, nothing. Not alone, not a combination. Nothing. Okay? So this is definitely a possible scenario. This is definitely a possible scenario, and that's why we go only with the last momentum and only on the short-term trading. Dollar franc, both are tradable. Both directions are in play, short-term only. Aussie dollar, we were bearish on this one. We enjoyed a beautiful drop down right here. Right? We reached our target and the magnet zones, which means we can expect a bounce to the upside according to the weekly and the monthly. As I explained a few times in the past, I expect still in possibility of 0.84 for the reason of only one reason. Let me just clear it here a bit. For this reason, 0.382 of the weekly cycle is 0.84. That's why I expect it to rally towards there as long as this low holds. For that to happen, we need 2 waves down on the weekly chart or the daily chart. And this is exactly what we start to get. Okay? Divergence is developing. 2 waves down happened. Basically means we can start looking for the sells. Do we have the false breaks? on the 4-hour or the 1 hour in order to go buys? The answer is no, not yet. Do we have higher highs on the 4-hour or the 1 hour chart after the false break? The answer is no, not yet. Do we have 3 waves up, 2 waves down breakout to start going for buys? The answer is no, we don't yet. Which means we can still get the next level of the extension of the cycle, which is 0.76 zone. This is also the beautiful trend line supporting us down to there, right? And the 4-hour chart cycle here would take us the same place. In order to invalidate that, we need to break this trend line. That's the double cycle from the daily chart, right? This is the trend line. As long as we are below it, we can look for short term only, because the weekly, you remember what cycle it is, right? Short term sells are still in play as long as we are below this trend line. Very, very simple. Okay. Aussie Kiwi holding a double bottom with a bullish divergence on the moving averages, which makes it valid for the buys due to the monthly and the weekly cycles. I don't need to remind you that. Bullish trend line, bullish hidden divergence, well, not reached, but we are bouncing from the trend line zone. Daily divergence is in play. So the only problem with that situation is we don't have, no, actually we did have the false break. We do have the convergence here. Yeah, we are bullish there. Bottom line, this is the double bottom that holds. Bullish divergence on the moving average is in play, which means every 2 waves to the downside and breakout, we are after buys. 1, 2, breakout, buys. Invalidation, this low. Targets, according to the daily cycle, 38.2 is here, so 109 at least for the short term. That's all. Invalidation, this is the low for us. Aussie versus the franc, our bearish move finally happened and gave us another low. The divergence here is in potential creation. We are waiting for buys. One false break was in play, second false break taking it place right now. Bullish divergence is in play. An aggressive trend line is about to make the breakout right here. For aggressive, we can start looking for the buys, which means lower time frame 1, 2 breakout. For conservative, we would want that to go above the last high, which is here, the last high of the false break, and then for long-term buys. For aggressive, we already have the low. Okay, so that's all. That's for the Aussie franc. Bullish it is. For short-term sales, I would not do that now. We had all these rallies chance to do that. I wouldn't do anything now. Why? You have a daily divergence, 4-hour chart divergence against you. Why would you go and sell? And the weekly bottom here on your range. Why would you go on this? I don't know. From my point of view, no, I wouldn't. Why? Really? Why now? Daily not complete? False break? Well, if it's over, it's over. That's why it starts to be aggressive. And even the slope might go and tick to the upside here. I don't know. From my point of view, I wouldn't deal with sales here. Of course, I might be wrong, but for me, it starts to be much more bullish than anything else. Aussie yen, long term. This is the weekly chart. We have no divergence here. This could turn to be a range, but it's still too early to know yes or no. So for Aussie yen long term, there is nothing against to avoid the sells. For the short term though, we are here on the duplication zone on the daily chart with a divergence developing. No two candles in play, which makes it aggressive. The only one that is in play here is the 4-hour chart cycle, and this is the special cycle which is in play. The divergences are there. The false break number 1 is in play, and basically is the only one. 1, 2 divergence. No, this is the second one happening right here. This is the place where we get it. So Aussie yen only aggressive because we don't have any higher highs, right? And the way to do that is on the 1-hour chart. On the 1-hour chart, by the way, we do have the setup here. And this is the 1-hour chart cycle by itself. That's where the Aussie yen comes into the short-term retraces up acceptable scenario. Targets. First of all, the 1-hour chart move, which makes it right here. The next one, of course, starts to be the 4-hour chart, and 84.30 could be definitely in play. Once we approach this level, we can continue looking for the long-term sells. Currently, short-term aggressive buys versus this last low. If this is an engulfing, this is of course the extra confirmation for that scenario. Aussie Canadian was and remain the only pair I wouldn't deal with, especially now after breaking the last high. Neutral. For me, completely neutral. I see nothing from weekly and daily combination. New Zealandian dollar. We are in the weekly range. So that means for us, sells. This was the daily cycle, the double top which we accepted. It could be anything of scenario like this or a ranging plan. For us, the plan was and remains simple. Bearish, sell rallies. 4-hour chart retraces in 2 waves, or bearish hidden divergence, or a range, and we are for sales. Very simple. So Kiwi dollar, bearish. Kiwi yen was bearish the entire week, exactly like all the other yens, due to the same reason I explained before. This is a triple cycle. Now bouncing from the low, the divergence exists on the moving averages. What did I do? The divergence exists on the moving averages. Weekly bottom of the ranging pattern. Again, aggressive. We have nothing for the conservative in terms of weekly. So the only place here to deal with, exactly like with the Aussie yen, is the 1-hour chart. This is a triple by itself. So we are on the aggressive approach to the upside as long as this bottom holds. Kiwi yen, acceptable all the way up to 77.60. Short term, aggressive, buys, this is the invalidation. New Zealandian franc was and remains neutral for me due to this basically. I don't know how to eat this situation, so I prefer not to deal with that. New Zealandian Kiwi. We are looking for the trend line. 094, 095 basically was and remains the critical zone for us right here. The daily cycle is still on the same zone. 4-hour chart, we never got another false break and the breakout. And to be honest, I wouldn't deal with longs here because it's kind of the range is kind of too small. So Kiwi CAD currently neutral. We are looking for new false breaks, new lower lows for a sell. Currently, nothing to do. CAD franc, after invalidated the breakout of this low, basically never gave us the 2 waves retrace and the buy on the 4-hour or the 1-hour chart for conservative trading. Never got us higher highs, which means we're still waiting for that to complete it. We have the trend line from the weekly. It's a bullish hidden divergence on the weekly. Daily is a divergence by itself. The only thing we are missing here is a setup. I wouldn't deal with sells here due to the fact we have weekly and daily divergence and the levels. All the things together make it currently neutral. There is no reason for sells from my point of view, even though this is the current momentum. I don't deal with that. And we have no setup for buys. Therefore, it's neutral. CAD yen, no bullish divergence on a drop down, only bullish hidden possibly forming. On a daily, no divergence formed yet. On the 4-hour, no false breaks yet. And on the 1-hour, no higher highs yet. So CAD yen remains bearish. Right? Fact. No any signs against us on none of the time frames, which means sell rallies. That was the plan, that remains the plan. And congratulations, guys, we are done with the Forex instruments. Going to the commodities and indices. Gold, in order to become bullish, we must place itself above this high. We did. We must have for ourselves 2 waves retrace. Do we have it on 4-hour or the 1-hour? No. Right? Therefore, we have no setup for the buys yet. We are waiting for the setup for the 2 waves and breakout. If we have it, we are long. If not, we do need to pay attention to these guys. This level is a very suspicious zone. Very suspicious zone. It's moving here in this tunnel. It could, if it doesn't manage to hold above the trend line and break this low, we are towards 1270, 1260. So we must make sure, in order to go the long position, 2 waves retrace and a breakout. We have it, we are long. Silver, we got the move down on the previous week that we wanted. This is our trend line. We must break through that in order to become bullish. Okay, so we are bullish, we're waiting for the buys. We must go above the trend line. Could that go and clear the next lows here for us, 16 or 1540? Definitely yes. And in the case of the commodities and the big range we have, the lower we get that from, the better would be the next portion of the rally. So stay bullish, look for the buys, wait for the setup. Oil. This is the only last trend line in play to invalidate the sells. Previous week, we had a beautiful move to the downside. As long as this is what I'm talking about, of course. As long as this top holds, we are looking for the sells. Bearish hidden divergence could be the great combination for that. In order to do so, we go to the 1-hour chart. We confirm a divergence from the 4-hour with the 1-hour. Do we have a trend line here? Do we have divergence here? That's the question we ask ourselves. If the answer is yes, we are looking to go sell with the breakouts. Alright? So that's for the oil, bearish, as long as this high holds. Natural gas, we are bullish there. For those of you who are in the investment we have from 260, hold on with your stop loss on break even for long-term investment only. Indices, I'll start with the DAX because this is the most interesting one. DAX did exactly what we wanted as explained on the weekly forecast. We had another low and bouncing the 61.8. Boom. Clearing this low, perfect place for finishing the rally. Our plan for the long term did not change. We want the rally. It could be into the range. It could be in two waves. It could be a rally for a bearish hidden divergence. It doesn't matter for us. We need a rally. We need a rally to keep selling the long-term convergence from the weekly chart. DAX, long-term sell, short-term possible retraces to the upside exactly because of this. So we want the rally to happen before we sell. Okay, so long-term sells, short-term acceptable retraces to the upside. This is for all of them. Dow Jones, that was our breakout before, right? So rallies are acceptable. We want bearish divergences. For example, bearish hidden divergence. And then we can start looking for the sells. Short-term rallies are in play. Long-term, still bearish. And of course, the UK FTSE is still the same. Exactly. We want the rally. It could be down to the bearish hidden divergence, up to the bearish hidden divergence, or this. Remember, 1, 2, 3, 1, 2. One more rally in a bigger view, and a crash. Short-term retraces, long-term sell. Does not change our plan. Cryptos, guys, thank you for your patience. I know it was a long session, but I really wanted to cover everything. I know it requires a lot for you, so sorry for that. I'll make it simple. That was our last call on the Ripple versus the Bitcoin. Well, the bit, not the Bitcoin, versus the million of the Bitcoin. That was our breakout. We got paid 1 to 2 risk reward. As long as the low holds, we want 2 wave retraces and buy. This one drop, straight drop, is ultra suspicious. That means we might clear another low level. So for us, the plan remains very same. 2 waves down, breakout, buy. It was and remains exactly the same. And here, remember the Ethereum versus the Bitcoin, guys? This is our long-term trend line. We finally cleaned the table here. We are building up 1, 2, 3. It's happening, and it's happening live. We are right on the 50% retrace from the daily, right here. The magnet zone suggests a bit lower, like around 106. It's possible. It's doable. The lower we get, the better it is. We need to go above the trend line. Once we got it, 1, 2, breakout, and we have a huge potential for skyrocketing. Ideally, we should get it here, next to 106. That would be simply the best. If we have, then we even can connect the magnet zone trend line, squeeze the trend line. Currently, we can't. We have no magnet, right? And no false breaks yet confirmed. So we can't squeeze at this stage. So that's why the bigger trend line is in play. We must wait here, break above that, give us a bomb, guys. So have this on your list. The major ones, Ripple was skyrocketing finally, yeah? During the weekend, we got a breakout, we got paid here, crazy risk reward. That was the only place where divergence came in place against us. You do the mathematics, guys. For the daily, our plan did not change. As long as this low holds, we're looking by retraces, which means 4 hour, or if you have a 4 hour bottom, then 1 hour retraces. Currently, you can see yourself, it's one way drop, so we have no 2 waves. This one will require a bit more of the patience. Ethereum, I don't see any clear setup here, to be honest. We got stuck inside very narrow range. So I prefer this one. Basically don't touch. I prefer the Ethereum versus the Bitcoin, as I showed you before. And Dash is, sorry, that's Dash BTC. That's Dash versus the dollar. Dash had for us one leg of this triple. Basically was in a bullish. It turns to be kind of a range, and this is where it's suspicious. We might clear here. Anyway, doesn't matter how we turn it around. 2 waves down. Breakout, we are into buys. For the momentum. We need these 2 waves down to happen. That was the last one where it happened, and the divergence against us was immediately created. So we need to get it recreating and buy. From my point of view, the leaders on the list are the Ethereum versus the Bitcoin, even though it requires some kind of waiting mode, and the IOTA. I think this one is very interesting. The way it forms, I believe with the breakout, it can start and create for us some great stuff, great momentum. This was the previous breakout, which is still holding, and this is the bigger momentum, the bigger trend line that has to be broken after the triple double. 1, 2, 3, 1, 2. So that's the full one. Okay, and of course, oh my god, the OMG, one of my favorite technically. Look what it does, you will understand. It's very simple. 1, 2, 3. So we need 1, 2, and a trend line. Should I continue from here, guys, or you understand the full picture here? Amazing, right? Let it create, let this divergence complete, let the breakout happen. That's what we are building up here. And that's all. That's the full review for us for the entire week. Costas, I totally agree. Cryptos became much more technically recently. When there is the eye of the control on them, and a lot of more official money involved, not just speculating money, much more official money is involved. They are much more technical. The volatility dropped, of course, but you know what? It's funny because Ripple was doing yesterday like 10% move or so, and for us suddenly it's a small move, right? Because we got used to 100 or 1,000 moves percent per day. It's moving. It's moving 2, 3, 4% per day easily. Still, but somehow it's not enough. Guys, I'm very sorry it took so long. Thank you for surviving that. The importance of setting up the entire week, and for me, it's extremely important to explain everything. So thank you for being here, for surviving and holding. I appreciate that. I wish you a wonderful week. Going to complete the report and send it over for you guys. So thank you. Have a wonderful day, wonderful week. And remember, in such weeks, patience and timing. When you ask yourself the same little questions I keep asking you over and over again, you get yourself the answer. When it's tricky, it's best not to trade. Right? Remember that. Thank you guys. Have a wonderful day, wonderful week. See you tomorrow.